Hello, welcome to the January 2013 video edition of the Iowa General Fund Monthly Revenue Memo. I'm Jeff Robinson, Senior Fiscal Analyst for the Iowa Legislative Services Agency, the nonpartisan support agency of the Iowa Legislature. This video will cover Iowa net general fund revenue for the first 7 months of cash fiscal year 2013. I will also discuss recent individual income tax estimate payment activity and present information on the trends in net general fund tax receipts. Over the months of July through January, Iowa net general fund revenue increased $313.7 million, up a significant 9.1% compared to the same 7 months last year, a percentage change that is essentially unchanged from the year-to-date value at the end of December. The month of January was highlighted by a drop in corporate income tax receipts, a decrease in individual income tax refunds issued, and a massive increase in individual income tax estimate payment deposits. So far, the fiscal year has produced solid gross receipts growth at 6.6% year-to-date, supplemented by a 27% decrease in individual income tax refunds issued. The major source of general fund revenue growth in January was individual income tax estimate payments. After a strong growth month in December of 27%, estimate deposits jumped 68% in January, for a combined increase over the 2 months of $75.5 million. This chart shows the 12-month moving total of individual income tax estimate payments since 1994. You can see from history that this recent jump is highly unusual. A previous large percentage jump in 1998 was likely influenced by the income tax rate decrease Iowa enacted at that time. There are several possible reasons for this large jump in estimate payments. Estimate payments are made by taxpayers with significant taxable income that is not subject to Iowa income tax withholding. Throughout the fall of 2012, Congress was attempting to resolve the issue of the expiration on December 31st of temporary federal income tax rate reductions enacted during the 2000s. Some of the debate centered on disallowing a portion of itemized federal tax deductions for taxpayers over a certain level of adjusted gross income. One itemized deduction that would be impacted is the federal deduction for state income taxes paid. If itemized deductions were restricted for some taxpayers starting tax year 2013, it would have been advantageous for them to pay as much state tax in calendar year 2012 as possible. Estimate payments mailed before January 1 would be fully deductible from tax year 2012 federal returns, but payments made in 2013 and beyond could be limited in deduction value to the taxpayer. Part of this large run-up in estimate payments may stem from taxpayers anticipating a federal tax change that would make their state tax payments less valuable. Second, the congressional debate also focused on changes to how capital gains were taxed going forward, with the federal top rate of 15% scheduled to increase to 20% starting January 1. Assets sold by December 31st would be taxed at a maximum rate of 15%, and assets sold after that date would have a maximum rate 5 percentage points higher. This may have caused taxpayers to sell a larger than normal dollar volume of assets in 2012. Taxpayers selling long-held assets with capital gains would also need to make estimate payments to Iowa, and this would most impact the quarterly payment due in January. Third, and also fueled by federal tax policy debate, many companies issued extraordinary dividends to stockholders at the end of 2012 in anticipation of a federal tax rate increase on dividends for all taxpayers. Increased dividend income would result in the need for taxpayers to increase their estimate payments to the state. Finally, the stock market posted good gains throughout calendar year 2012, so some of the increase could simply be taxpayers recognizing their gains were better than anticipated and increasing their final tax year 2012 estimate payments accordingly. Let's now take a long-term look at major Iowa general fund tax revenue sources, net of refunds issued. This first chart depicts individual income tax revenue, gross refunds, minus refunds issued. The information is presented as a 12-month moving total starting June 1994. The last 2 months of this graph show how the estimate payment issue just discussed has impacted the income tax trend. The second chart shows net sales and use tax growth over the same period. Net tax revenue has generally shown strong positive growth since the trough experienced March 2010. Corporate income tax has been a significant source of revenue growth since April of 2011, with annual net revenue at that time equal to $206 million. The latest peak was $471 million. The most recent 2 months have registered declines, but it is too early to tell if this will be the new trend. This chart shows the combination of all general fund tax revenue, net of refunds, with the trend that was in place through March 2012. With the processing of tax year 2011 individual income tax returns, the trend took a marked step higher, and since that time, net tax revenue has been surprisingly strong. In summary, at the end of December, there were several revenue timing issues that made it appear very difficult for the month of January to post positive growth. The strength of individual income tax estimate payments, combined with a downturn in tax refunds issued, was such that all the negatives were overcome, and the month in fact turned out to be a very strong one. The first 7 months of cash fiscal year 2013 have shown remarkable growth on a cash basis at 9.1% year over year, considerably above the current revenue estimate. With the exception of a possible reversal of corporate tax growth in recent months, all revenue sources are pointing towards continued positive growth for the remainder of fiscal year 2013. I thank you for your time and your interest in Iowa General Fund revenue. Please check out the next monthly video memo in early March.